Hey guys, JJ's here. Welcome back to another video. Um, Today we're gonna do a pretty quick trade recap, but probably one of my most important ones. I had a pretty horrendous trading day. So yesterday I was in like a negative $200 P&L for the account. I got down to negative $677. Like I said, horrible trading day. We're gonna kind of work backwards. Starting with I was down my most recent trade. I was I had just lost this trade and I was pissed off, super emotional, and I said, screw it, I'm entering a short at 80 units, and I'm just not going to have a stop loss. I'm going to have a TP down here because I know price is going to continue lower. Well, as you can see here, I very easily could have been wrong if price decided to do this, which just shows me exactly why I should not have done that. I did do it though. First let's go over this. This trade lost. This trade that was an accident. This trade lost. This trade lost. This trade lost. Won this trade. Put me at plus $24 P&L, but I know I don't deserve it. This was a awful trading day. Awful, my worst psychology trading day for sure. Um, I'm gonna take the rest of the day off the charts after this, but let's talk about this. So I kind of started doing something different. Um, you guys usually see me bouncing around to 15 and 5 minute time frames, but I've been watching like TJR's trade recaps and stuff, and he likes to trade on the 1 minute time frames. Now I want to talk about why I kept on getting stopped out, but price still kept going short. Here's my thing. Ready? It's not about the necessarily the way I entered. The way I entered here was just fine, right? Set up a limit, entered me into the trade, came down, came up, stopped me out, barreled down, right? The issue here is my stop loss placement. I'm on a 1 minute time frame, right? So I knew there was a fair value gap here, but I thought this one was going to be the one respected, not this one. It rolled through this one, respected this fair value gap, and then continued lower. I was wrong about that. Now I was kind of like thinking to myself, okay, like I've been sitting here for 20 minutes. I took this trade 2:33, so I've been sitting here for 20 minutes thinking about this. In that 10 minutes, I took that one not so smart trade, but it paid off. Um, I did that. Or we might be flipping bias now. If we break structure to the upside here, maybe. We'll see. But anyways, that's not what I'm trying to talk about. 1 minute time frame. This is just terrible, terrible stop loss placement. Now, what could I have done? 5 minute time frame. Maybe not at this 5 minute high. That's a little absurd. Maybe, as you can see, we have a 15 minute fair value gap here. It's a little bit more riskier than this, but if we just put it, if it's like a good wick here, and the fair value gap is here, then that worked out just fine, and that was a 3 hour trade. That would have been great. I wouldn't have gotten stopped out, and I wouldn't have made really bad decisions. Now, I did stick to risking $100 per trade, except for that one limit order where it was 80 units, which was like, I don't know how much that was. All I know is that price moved from like, all I know is that price moved from like here to here, and it was plus $700, which is a lot. Anyways, um, so I'm trying to talk about what I could have done differently. That on that trade could have done that differently, easy, but I was too emotional and too pissed off that I had already lost two other trades, no, three other trades to see that. I'm just gonna kind of roll it backwards. I think this was another trade I entered. Let's talk about this trade. So, this one I did kind of follow that, and I placed it right there at this 1 minute high. So here's what I'd failed to recognize. We were in this kind of consolidation range. Yes, I still thought this consolidation, even though we swept this high and filled this Ferrari gap, right? I still call it consolidation range, right? And then we were kind of this, mini downtrend, right? And then boom, we swept this high, continued lower. Now, let's see if we can talk about something I could have done differently. Let's go to the 5 minute time frame. Time frame up, right? What could I have done differently? Okay, this one is maybe put it at the body of this high, which still been a 2 hour trade. It's still a good trade. And then bam, I wouldn't have been stopped out. Now let's talk about entry wise. Was there a better entry? I wouldn't say particularly. This one would have been a trade where it's like, oh, I kind of lost this. Could have placed my stop loss a bit higher. I could have placed it here, or I could have placed it at that 2 hour spot up here, right? Still would have been a good trade. So that's how I lost that one. Okay, it's not letting me go back any further. But I did take another trade. That was 2 trades. 1, 2, 3. I don't know what this trade is. It's not. I'm sure it's one of these. But let's start. I did take a trade up here. I do remember that. I took this trade up here, targeting previous highs. Hold on, targeting like here, I think, something like that. Now, here's why I came to that conclusion. So, gotta keep in mind, I'm looking at price right about somewhere around here, right? I'm looking at price, and I'm like, oh, okay, we just came down into this fair value gap, right? I think now we're gonna place my stops down here and target these highs, right? Now here's what happened. You ready? Yeah, yeah, I do. I remember looking at this and analyzing it. So I entered like right here, something like that. Stops right here. Take profit got ran through like here, right? So yeah, I think it's something like this. Something similar to this. What happened? Price stopped me out, came up a bit, swept liquidity, swept that high, reversed. This is why I need to stop trading before school. It's just not favorable per se. Um, like I said, I do graduate in a little over a month, and I get out of school in about a month. I go on spring break next week, so this is literally like my last. I have tomorrow of school, no school Friday because it's spring break, and then next week is spring break. 3 weeks of school left after that, and then I'm done. Like I'm done with school. I'll be able to have my mornings to trade, like at actual New York Open. Now let's talk about what could I have seen if I was sitting there at New York Open. Okay, let's see. So, you know, we have been in a bit of an uptrend, right? Let's see what we've done. Okay, so down, boom, came down, swept these highs, continued lower, higher high, higher low. Wait. Higher high, higher low, higher high, higher low, higher high, higher low. Moving up, high, lower high. Oh, I butchered that, but lower high, higher low, break structure to the upside, higher high, higher low, higher high, higher low, higher high, swept all three of these, higher low, fill this fair value gap, higher high, higher low, or lower low, swept all of this, probably filled some kind of fair value gap here. Let me see. Yeah, filled a fair value gap right here. Oops. Okay, now I want to talk about what was going on up here. I think, oh yeah, that's what it was. Okay, so we had a liquidity sweep. Okay, so what did price do? It filled this fair value gap, or sorry, not this fair value, this order block, right? Filled this order block from Tuesday, yeah, this past Tuesday. Filled that order block, right? And then what did price do? Barreled down, right? So I kind of want to specifically, I didn't realize this until just now, but you know, it would have been something nice to, it should, like, if I start dedicating, like, I already have, like, my morning kind of dedicated to trading. I sit down on my computer starting at, like, 7 or 7:30, and I have about 30 minutes to an hour to sit down and actually work on this. But I need to start being more proactive with my charting. Mark out order blocks that I see. Mark out liquidity that's been swept. Buy side liquidity, sell side liquidity. Mark out fair value, like high time frame fair value gaps, so that way I can see what price is doing in the high time frame. Now on this 5 minute time frame, okay, what do we see? We see, okay, price swept these highs, filled this fair value gap. Okay, do I see an entry here? Let's talk about that. Do I see an entry here? So we disrespect. So we swept. We actually swept three forms of liquidity, right? Liquidity here, and we swept this liquidity right here, right? Now is this a trade that I would have felt comfortable entering? I need to start trading more with order blocks that way. And it's like fair value gaps. Figure out which ones you figure out. The more you trade fair value gaps, the more you figure out which ones work and which ones don't. But anyways, so as we can see, price buy side pressure was there, but so was sell side pressure, right? As you can see with these big candle wicks, right? So boom, price fills this order. Oh my gosh, what am I doing? Boom, price fills this order block, fills, and decides to, big kind of indecision candle, I would say, and then boom, barrels. Now, if I entered off of a break of structure, then I wouldn't enter to down here. So what do we have? Liquidity sweep, filling a order block, right? For most people, or not most people, but for some people, this is enough, right? As soon as it fills the order block. Okay. I mean, it is a higher time frame order block, so I can't understand why. I mean, I think it's even in the hourly, yeah. Even hourly, it's a good order block, right? I'll need to backtest more order blocks for me to do this personally, but let's see it. Okay, boom, we enter. So, I see price, I see this order block, I see it, set up price at that high, right? Now, for a higher time frame order block, usually when they get entered, causes big shifts in the market like this, right? Now, I would feel comfortable maybe going that far, max, right? And I'll probably have multiple TPs. But now, if I was like a super ambitious person and I didn't mind taking multiple TPs, right? Liquidity here. Yeah, crazy, freaking insane. Now, I would never take a trade like that. Um, for me, I probably wouldn't take any trades over 1 to 5 R. unless like liquidity grabs and stuff called for that. Um, but like 1 to 5 R, I believe is already insane. I prefer to take 1 to 2.5 to 1 to 3.5 R trades. That's my sweet spot personally. That's what I had no success with. So let's talk about a couple of things that I learned today. Right? I learned that here. Actually, let me go read my notes. So I didn't take any screenshots because I deleted all the trades because I was pissed off at myself. But I'll be honest, I had a horrible trading day, especially psychologically. I woke up, started trading around 8, got to school and checked the trades, stopped out. Came home, took several more trades, awful. I was down to negative $677 on the account. What did I do? Into short, no stop loss. I knew price. I don't know why this says piece. I knew price was going lower, but I know I shouldn't have done that. I broke most of my most important rule, which is my risk management. Technically, my account should be technically my account is sitting at plus $24. I don't deserve it. I'll run with it, but I'm never trading like this again. I promised myself I'd have better trading psychology, risking max 2% per day, and I blew that. I can't keep trading this way and expect to be profitable. I knew that I was only gonna make things worse, and it did. Then I took my biggest risk of all, which paid off, but I can't risk like that again ever. We'll also go ahead and throw in here. I need to start looking more at higher time frame order blocks and fair value gaps. So, pretty bad trading day. I'm very lucky to be sitting at this kind of break even spot right now. I shouldn't be. I shouldn't have risked like that, but you know, I can't change it. I already did it. Most I could do is reset my account, but then I would lose all of this for the entire month, right? Um, I think I'm just like not even really gonna include this day win rate rise because win rate and all that because this is not my normal psychology. So I'm still sitting at like a 35% win rate for the month. I had that one pretty bad day a few days ago too, but Monday. But anyways, we'll just leave it at that, right? We'll do better over the next few days. Oh wait, I did want to mention. So like a higher 5 to 15 minute time frame, this would have been a good trade for me to take. Okay. Now, here's something that to me is of higher confluence, right? We had a we had this big order block. Okay. Now, what did price do? Okay. Boom. Price filled this. We had immediate reaction, right? Price wicked this, came back up, filled this right here. I'm not sure if you can see it because of freaking this. Not sure if you can tell, but we filled this lower time frame 1 minute candle order block right here. So what does that mean? Okay, we and then we saw a reaction off of that, right? Now, an entry that I may have done would have been, oh wait, listen, wait, we just had a okay, we filled this high time frame order block, but that wasn't enough for me to enter. Okay, we came up, came down, marked out this order block, price came into it and saw another immediate rejection. I think we're going to take shorts. So right after this candle closure right here, this is where I would enter. Alright, stop at this high, or really the top of this order block, right? So we enter. Now what are we targeting? Shorts. Now here's the thing though. This one is actually a bigger stop loss, right? Because look, we're targeting this same low as before. That's a 2.58 R, right? But if we come up here, enter short at the entry. I think what I'm gonna start doing for my order block entries is do it. So if it's a 5 minute order block, such as this, or no, this is a 15 minute order block. Yeah, let's go over here. Okay, if it's a 5 minute order block, scale down to the lower time frame. Oh wow, scale down to the lower time frame, right? And set my entry at a high within that order block. But I would say within the premium to middle of this order block. Because not all order blocks get tapped into like this so aggressively. Sometimes they only wick in right here. Sometimes they only come to here. So, like I said, this is why I need to do some back testing. I need to really fine tune my entry strategy, and the best way to do that time wise is to back test. Or else I'm going to be sitting here for years, and I mean years, sitting here trying to try out different things on different days, right? Or I could just use what I already have and just backtest like freaking crazy, and then continue to forward test it. And instead of being profitable in 5 years, I may be profitable in 2 years or even a year. I mean, I might not be one of those people, but I could be, right? I mean, I've seen people do it. It's very possible. I hope I do it, but I'm not gonna sit here and say I will. Anyways, so let's say my entry was set up at this high. Okay, perfect. And we're gonna set stop loss at this high. Now we're gonna target that same. Wait, was that same low? Yeah, we're gonna target the same low. The other one was a 2.5 R. This is a 6.43 R. That is an insane R trade. Now, me personally, when I see something like a 6.3 R on a trade that I have set up, that's a little absurd to me. So, and it kind of scares me a little bit. And that's why I also need to backtest. Because I think that this would have been a great entry for today. And it obviously would have hit and won me crazy profits. However, whenever I'm sitting here and I'm looking at it, I'm like, okay, this is why I need to backtest because I'm not sure about this. I won't be sure till I see it a lot of times. See how we entered at this high? Okay, maybe what if price decided to only come to here and then run short? It entered the order block, it filled what it wanted to, and it ran short. I would have been crap out of luck. So, what if instead I enter here at the top of the order block? I know price is probably going to enter the order block, right? So entry risk wise, like yes, I'm not targeting as good of an R, and I'm not going to be making as much money of it. But model wise and probability wise, I see that if I set it right here, price is more than likely going to enter this order block, right? You know, now I could set my stop loss here, right, and call it a day, or I could be smart with it and put it at the high, and that would be the most plausible. Now, if I wanted to be a bit more risky, I could do that, but the whole point of day trading is to limit my risk and volatility as a trader. And that's what I need to work on. I can't be emotional and I can't be like, "Oh my gosh, I'm going to hit like a 4R or a 6R or a 7R. So, yeah, if I enter it like this, oh no, I just got stopped out. If I had just like put my stop loss where I initially should have, I wouldn't have been stopped out and I would have won money, but now I'm down on money." Right? This is exactly what I understand what like TJR and Justin Roiland and all them meant whenever they said like don't trade emotionally and don't trade for the money, right? If you if you are constantly looking at the R, if you are constantly looking at the like the profits, you're like, "Oh, I could make $500 from this. Oh, I could make $200 from this." That's only going to screw me over in the long run. Smart entry wise, very smart entry wise. Order block high, targeting this significant area of liquidity from actually this morning. So this was a London low. Okay, wow. So that just reinforced it even more. This was this morning, 5 a.m. London low. Heck, that has reinforced it like crazy. Okay. Boom, we got a London low right here. Forex, I mean, it's not really Forex. I mean, it is the S&P 500, but it's like it's a CFD. So, uh, yeah, it's still Forex. But so I guess I can use this. But this is exactly what I mean. Look, see this right here? Boom, winning trade. Entered off of a high time frame order block. Stops above the high. Entry at that order block, targeting a high from London session lows, right? Now, if I wanted to be a bit more ambitious, I could target previous day lows, which would be here. Now, this is like ambitious as crazy, and this is probably not something I would personally target, right? Look at that, 3.7R trade already. Just not even the low, just the wick low, the top of the wick low, 6.24 hour trade. Now this is too much. What would you say? Too much risk for me. Like I said, that like whenever I see that, it's like cool, but you know, I'm trying to think in the mindset of somebody who is profitable. Would they take a trade with this much risk? Because once price gets down to here, if I don't if I don't close half of my position and like move stop loss to break even, right? And I get down to here and I'm like, I know I should close all my positions here, and or at least close half of my positions here, and move my stop loss to break even. But I want to make as much money as possible. That's becoming a money based person, not an outcome based person, or system based person, right? That's exactly what I'm trying to do. I know I went a bit on rambling today and all that. Um, I'm definitely going to do some back testing for sure, and just do some more learning and keep watching TJR's, like trade recaps and stuff, because like dude has some great sauce on his YouTube. It's freaking insane. Hold on, let me. Oh, actually, let's look at next week, or let's look at the rest of this week. Oh, GDP, unemployment claims. Ooh, not very good. PCE. Well, these both come out at 7:30 tomorrow, so like I said, I need to stop trading before school, so I'm gonna start trading when I get home after school. Um, we'll see. We'll see if price gets affected much. If not, then we'll trade. Um, if not, then we'll trade. Next week, my spring break. Of course, the only week I don't have school. What's happening? Chicago PMI on Monday. PMI, job openings, ISM. Wednesday, NFP. Thursday, oh my gosh, Thursday, unemployment, PMI, GMMC. Friday, PMI, NFP, unemployment rate. Alright, well, um, we'll just see what price is like next week. But, hope you enjoyed today's video. If you did, please like and subscribe. And, if you have anything, please leave it in the comments. Thank you guys for watching. Later.